In this section, we're talking about asset information. We're on page 2 of the estate plan design worksheet. The first question asks, if you're single, do you expect your assets to exceed $5.25 million? Now, please don't be turned off by this. Everybody should have an estate plan. And estate planning has goals that do not pertain to the amount of your estate. The reason we're asking this question is for tax planning and whether we need to be doing any tax planning with regard to your estate. So if you're single and have more than $5.25 million, there's some tax planning suggestions we can make. If you're married and have assets in excess of $10.5 million, similarly, we can do some special tax planning. But again, estate planning is appropriate for appropriate avoidance and asset protection for everybody. We also ask if you have real property. Real property is important because we need to retitle all the assets to the revocable living trust so they don't have to be transferred into the trust by the will or the power of appointment later. Our goal is to get all the assets into the revocable living trust from the outset. So we need to know the address of your residence so we can pull the deed and transfer it into your trust. If you have commercial properties or rental properties or timeshares, we need to know that as well.
Also, we want to know whether you have other assets, such as retirement accounts. We may or may not change those beneficiary designations, but if we design your trust to have lifetime trusts for your kids, we'll change the designations so they flow through after your death to go into those trusts for your kids. So that's very important to work with an attorney on retitling retirement benefits, the beneficiary designations. Also, there's non-retirement accounts such as bank accounts, brokerage accounts, things like that. We want to retitle those so they're titled in the name of the trust, going to be owned by the trust, you as trustees of the trust. Those are very important as well. We also have life insurance. We will maybe change those beneficiary designations also to change them to flow through the trust after death by beneficiary designation. Or if your estate is large, over the $5 or $10 million that Randy talked about, we may pull those into a separate irrevocable life insurance trust to keep the proceeds out of your taxable estate. Because insurance is subject to estate tax, not to income tax. But these are things we decide once we figure out what you have. And then also business interests. If you own a business or an LLC or oil and mineral interests, we will retitle those also in the name of your trust. All those things avoid probate. And as Randy said, we want to avoid having it go by will at death or having to use the power of attorney during life to get it in your trust during your incapacity.
Again, focusing on the size of your estate, remembering that we just want to know how much wealth you expect to have when the first of you dies or the second of you dies if you're married. So we're also talking about, does anybody owe you money? So maybe that you loan money to your children, maybe that you loan money to a family member or a business. We need to know about that note that's owed to you because that's an asset that will be included in your estate. We also need to know about any anticipated inheritances, gifts, or any lawsuit judgments you might be receiving because potentially those could be included in your estate and we can assign those interests to your revocable living trust to make sure that they aren't included in your estate.
Next, we're going to be moving on to picking the fiduciaries in your estate plan, the people that will act on these documents on your behalf if you're incapacitated or deceased.